This is Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elkan, and we're joined by Steve McCarten. He's the Chief Operating Officer of Hull Tactical Asset Allocation. He brings over 20 years of trading experience to Hull Tactical Funds. Prior to joining Hull in 2015, Steve spent 13 years at Goldman Sachs and worked as a portfolio manager and desk supervisor for the Quantitative ETF Trading Group. Steve, thanks for joining us on the show this morning.
Happy to be here. Thanks for having me.
Absolutely. Well, to get things started, since you're a new guest, can you share a little bit about your market background and how you came to Hull Tactical Asset Allocation?
Sure. You had given a little background there, but in 2000, basically, a small firm called Barclays was launching a product known as the iShares, and Hull Tactical HTC Corp, Hull Trading Corp, was designated the market maker specialist for those products. They were hiring people in the industry. I was hired in 2000 to help launch those products. Subsequently, Hull's business was folded into Goldman Sachs, and that's how I ended up spending the last 13 years there. After a short stint in Cantor Fitzgerald's Supervisory group, I received a call from Blair regarding this product, and asked me to come in and speak with him. We felt it would be a good fit, and started with him in January of this year.
In today's market,
kind of came full circle.
Definitely. In today's market, especially when you look at a week like we've had this week, what should investors be keeping an eye on?
Well, again, they need to understand what drives the market, understand, what their investments are, what they're invested in, understand the products that they're interested in. There are many things that drive volatility in the market, be it interest rate changes or demand in China. Regardless of what it is, people need to understand the products they're invested in, the products they have faith in the strategy that they're employing, and just understand what they're invested in.
What is your outlook for the second half of 2015?
Again, regarding my outlook for the second half of 2015, what's great about it is, my outlook isn't as important as the model's outlook. So basically, the model for the ETF looks at a 6-month forecast of the equity risk premium, which is basically the S&P return minus the risk-free rate. So basically, our strategy looks to predict or kind of get an idea of where that will be in 6 months, and based on where we feel it'll be relative to the historical 6-month average return of the equity risk premium, we kind of scale our bet up and down based on our expectation. And I guess, as you can see, when we launched, we were about 60 to 70% allocated. We've subsequently gone to about 20% allocated before the correction. So we've seen we're performing, we're happy with the performance.
And Hull Tactical Asset Allocation has an ETF as well that's ticker HTUS. Can you tell us a little bit about that?
Sure. HTUS launched on June 25th. It's launched on the ARCA exchange. It is kind of I would say it's basically the result of Blair Hull's desire to look into the 2008 market crash. He was concerned with his portfolio as well as others, and how he could avoid something like that in the future. Blair had always been interested in market timing, and after 2008, that interest peaked again. He wanted to develop a strategy that could help avoid those types of losses, and the HTUS was a result of that.
So you've mentioned that there's a bit of a unique approach to your investing. Can you tell us a little bit about that?
Absolutely. Well, to the extent that the ETF kind of looks at market timing and somewhat of a forecast of the market out 6 months, it's been called the fool's errand, kind of, in the academic world. We feel the dynamics have shifted. We feel that academics have changed. Our strategy looks at multiple variables that have academic research. We look at large amounts of data. We feel that at no time in history prior to now has big data been available, and the ability to digest, synthesize, analyze, and use that data in a usable way. It's done in every phase of the business, be it marketing and marketing products or in social media, the way they predict your patterns and spending habits. We feel that large data is key, and we feel we can analyze it. We look at multiple variables that have academic papers published on them. We take that information, we analyze it, we synthesize it, and we come up with that equity risk premium forecast for the 6 months.
Why is it important to have active management in today's investing atmosphere?
Well, again, we feel that our product is kind of unique, and also that it's an institutional product in a retail wrapper. The ETF is available to anyone who can access an account. We feel our type of strategy prior to this was kind of only available to those in a SMA or in a limited partnership with $5 million or more. We feel that our product is active management in a retail wrapper. Mom and pop can access it. It's democratizing the product and making it available to everyone. Some people don't have, a lot of people don't have time. They're busy. They don't have time to look at their portfolio. We feel we give people active management, hedge fund type returns in a retail wrapper, and we do the work for them.
Hey, Steve. Thanks for joining us. We're on with Steve McCarten here, Chief Operation Officer of Hall Tactical Asset Allocation. Steve, I cut my teeth on the floor of the Chicago Mercantile Exchange back in the late 80s and early 90s, and very familiar with Hall Trading. Also went on to start a Bright Trading office here in Detroit with Bob Bright and Eddie Franco, and they always had the utmost respect for Blair Hall and his approach to market making and the markets. Now in this quantitative world with the algorithmic trading, how have you guys had to adjust your trading style? To me, Hall was the one that was kind of using computers and algos before everyone else was.
I agree with you. From my experience, we were the ones who kind of would come in back in the day. HTC would come in. They were using computers and algorithms before anyone else. Blair has always felt that he was cutting edge, leading trends in the industry. And again, our approach to this is no different. It's a disciplined, systematic approach to investing. We take the emotion out of it. We take large data, we analyze it, we synthesize it. We use academic research. We use published papers. We're constantly tweaking the model. We are continually, doing what we can to improve the model. So, Blair has historically been known for that, like you said, and I think this is just an extension of that.
Just market structure here. When you guys were down on the floor, making the markets for big options trade and, laying off in the primary, whether it be the S&P options or stocks and futures. Have you had to tweak, and do you have concerns about our current market structure?
Again, the market structure is, constantly evolving. People are looking to protect the investors. There's always going to be problems or issues associated with it. No matter how much we change it, there's always going to be something that causes people to question the market structure. We feel, that, we listed on ARCA. We have Cantor Fitzgerald as our lead market maker. They have years of experience. ARCA has been, the lead in ETF market making since the beginning. We feel partnering with the New York Stock Exchange, ARCA, and Cantor as our LMM, goes a long way in ensuring that we get the best quality markets for our investors.
Okay, and then just taking a look at the week that was here, amazing volatility on Monday. When those kind of things happen, do you try and tweak your system at all, or adjust it for the market conditions, or do you just stick with the programs that you have on paper and follow with them no matter what?
Again, we're a long-term approach. We are constantly tweaking the model, but with respect to short-term changes in market volatility, they don't come into play. The model is ever-changing and dynamic. It just looks at the numbers. It's a long.
Steve, are you still there?
I think we might have lost him.
You know what? Let's try and get him back really quick. That's Steve McCarten. He's the Chief Operating Officer at Hall Tactical Allocation. Just 1 second, guys.
All right.
Hi. I feel like I got disconnected, guys.
Yeah,
Apologies.
we did. Sorry about that. Okay, so what's your long-term outlook here? I mean, we definitely inflicted some technical damage here on the market, something we haven't seen in a long time. Have had some violent rebounds, some violent action here. I mean, if you look at it, yeah, it is a retracement. It's really not much from the 2000. When you look at the 2008, 2009 lows, it's what happened over the last few weeks. Kind of change your long-term perspective on the markets.
Again, our perspective is the result of large amounts of data being analyzed. We look at multiple variables. We went from a 70% long allocation to 20% prior to the drop. Just to speak to why, we have some proprietary variables that turn bearish. We look at the Baltic Dry Index. We look at price indicators. So some of the variables had turned bearish more recently, and we reduced our allocation. Again, it's based on an estimated equity risk premium. So apparently, the model had said we see a reduction in the equity risk premium. So it's just discipline, systemic, long-term approach without emotion. So the model is going to tell us what our allocation is on a daily basis.
And you're sticking to your system. I mean, if you take the past history and you take all the components of it, a lot of different factors, you change them, you tweak them to the current situation. It's what you have to do in the markets. You have to be constantly adaptable, and it seems like can't shake you from your foundation here of following your system. So that's an important thing about the markets. Any final words of advice for investors after this crazy week of, well, it's not even over yet, crazy week of volatility in trading?
Again, it's just investors. Anyone who's going to invest should be educated to the extent that they're familiar with their portfolio. They should know what they're invested in. They don't have to be, Series 7 license. They just need to have an understanding of their risk tolerance and what they're interested in. Again, we feel our product does the work for you. Basically, investing in HTUS gives you a tremendous amount of research and a tremendous amount of resources, in a retail wrapper. So it's accessible to a lot of people who otherwise would not have been able to invest in an approach like this prior to this.
Do you ever go net short in this?
The product can go, it's very interesting. The product can go long up to 2 times its exposure or short 100%. So, yes, we can be anywhere from 2 times leverage long to 100% invested in T-bills to short 100% of the spider based on, again, a scaled, estimation of the equity risk premium.
Well, based on what I know from Hall trading in the past and my discussion with you, I'm going to have to take a look at Hall Tactical US ETF for my portfolio, especially if there's exposure on the short side. Steve McCarten, Chief Operation Officer of Hall Tactical Asset Allocation, giving us a very different approach and outlook on the market. Steve, thanks for coming on. We'll hope to talk to you again soon.
Thanks, guys. It was great to speak with you. Have a great day.
All right. Thank you.